This is TWiT.
Stocks have become fascinating to a lot of people. Big NASDAQ drop in tech stocks. Alex, you cover big tech, so obviously you're covering, to some degree, the tech stock prices. Is this a reflection of some deeper problem with big tech, or is this just the usual financial market fluctuation?
I don't think this is a problem with big tech fundamentally. I think what we're seeing now is what I think is a perfect storm of a number of really challenging factors hitting tech all at the same time. I mean, just to quickly list them, you have the Fed raising interest rates, which deprioritizes growth and prioritizes current profits. And we all know that, the valuations of tech are much more about what they can do in the future because they have the ability to grow, in a faster way than, let's say, like, a brick and mortar store. So that's number one. I think that's one of the biggest issues. It's caused total re-rating of the valuations of these companies. Number two is the Ukraine war. You take a look at companies like Netflix, right, which pulled out of Russia, lost 1 million subscribers, posted their first, subscriber loss based off of that alone. It's also hit Facebook and Snap. I think those are big issues. The supply chain is still a mess. So any company that's going to sell based off of ads on these platforms is now starting to rethink it and trying to figure out, hey, how do I handle this? Inflation is, going to cause people to change the way that they spend. And it goes on. And I think that when you have all this hitting at the same time, it has taken a lot of the air out of the market, which, let's be honest, the market was not exactly running on the fundamentals for the last couple of years. And now it is.
So this is if this sell-off actually makes sense, it sounds like.
Yeah, to me, the thing that didn't make sense was the run-up on tech stocks over the last couple of years.
Right. Some of that was COVID, pandemic, though, right? Yeah, pandemic.
That's where I was going. Is the pandemic going to change the way that Amazon does business, Facebook does business? Companies like Amazon. Oh, well, we said Amazon. But Amazon, Facebook, Microsoft, Zoom. Of course it is. Netflix. Yes, definitely. And we're still seeing massive gains that haven't gone away for these companies. But the market, I don't know exactly what happened. For some reason, investors got carried away here and thought that this is the way that we were just going to be living forever. And I think in the middle of a COVID fog, it's possible to think that we're going to be living in the COVID, lifestyle forever, which means, of course, Netflix should be, $1,000 a share, versus what it is now, right? $199 this last time I checked. It got up to around 700. But it's obviously just not the case. We were always going to go back into the worlds. Same thing happened with people like on Clubhouse, right? They thought we were just going to be on Clubhouse, forever. And then the first night we're able to go out for dinner, that goes away. Yeah. And so Earth to investors, you got to think beyond, and it's a good thing, you got to think beyond a couple of years of COVID. And right now we're starting to see the hangover from what was an inebriated market that was just not working on fundamentals, working off of fairy tales.
Brianna,
I would love your opinion on this, because I have a theory about one of the main things that's causing inflation that I don't think is discussed enough, and that is the supply chain. So let me tell you about two of my hobbies. The first is collecting classic Porsches, right? Those prices have just skyrocketed through the roof, right? I have a 997. It was worth $40,000, 3 years ago. Today, it's worth about $65,000 or $70,000. Pinball machines are another one, because people are spending so much time at home and it's so hard to buy these things new right now. My theory about why inflation is really leading to a lot of the fear in the stock market, I think a lot of it's the supply chain, just because it's so hard to get anything. Cameras, even rare video game prices are just skyrocketing just across the board. I mean, I feel like we're not going to get a lot of these. I don't think we're going to get the market on the right track until we get our supply line under track, because the two are very much connected.
Yeah. And it doesn't look like the supply chain is going to get fixed anytime soon. Pat Gelsinger, CEO of Intel, was saying 2025. Not next year. That's the year after, just in case you don't know. Go ahead, Alex.
Well, the big debate is whether this inflation is supply chain related or whether it's interest rate related. I tend to agree with you, Brianna. I think that it is supply chain related. Here's a quick story. One of my parents' neighbors works in shipping, and to import a container from China, he called me over. He's like, Alex, we're making money hand over fist because it used to cost $2,000. Now we can make $15,000, and now the cost is in the 20s, right? So the supply chain stopped. It started. There was huge demand. Ships didn't go back online, and then you ended up having this massive increase in containers, which ends up, and shutdowns in China, right, which causes supply contraction. And then, prices go up. And my neighbor goes, listen, there's going to be inflation. And lo and behold, if you're working in shipping, and he knew. And that's where we are now. But that being said, the Fed is still going to raise the rate because the Fed, understands that it's been an easy money environment for the last, couple of years, that it tried to stoke the economy because of COVID. And so it feels responsible too. And so you might end up in a situation where you have the Fed raising the rate, which inevitably does compress the valuation of stocks, and that not solving our inflation issue, which could lead us to all sorts of hell. And so I do think that when people say, there's a chance we're going to end up in a recession in 2023, and the Fed says we'll have a soft landing, I tend to believe that the people with the darker predictions on this one, because it's not going to be easy to fix. It was easy to keep our economy humming during a pandemic, which is, somewhat of a miracle. But, we have to pay the piper at a certain point, and this is where it's coming.
Might not have been that easy. We also spent a lot of money on COVID relief checks and loans, and some say that's also been a cause of
well, it's
inflation.
Like, yeah, exactly. It's like a credit card.
Yeah.
It's like a credit card. Easy to whip that out and spend tons of cash at the mall. But then the bill comes and you're like, God damn, where's the money for all this? And it's like, oh, we should have thought about that when we were doing it, because it felt like it was free when we were walking out of the mall. But eventually that bill does come due and there's interest on it.
Brianna, you told a story about inflation having to do with and the supply chain having to do with your hobbies. I have purchased many a Pokeball Plus in my life to play Pokemon Go. Lisa recently broke her Pokeball Plus, went online. It was $20 when I bought it before the pandemic. $144. $140, but I can get it tomorrow. Now, Lisa's no fool, so she shopped around and she found somewhere where she could get it for $20, but you might not get it tomorrow. That was 3 months ago, and I think it's somewhere on a container ship between here and China. But, if you want it tomorrow, you're going to pay a little bit more for your Pokeball Plus. But
you can tell Lisa I've got mine, and I don't play that game anymore. So if she needs that,
we might need an emergency Pokeball Plus loan. This allows you to walk around town without having your Pokemon Go game out all the time. You just press the button on the ball whenever it vibrates, and you collect Pokemon.
It's amazing. It's amazing. Alex, I want to get back to one of the points you were making, though, about lower interest rates. And, I do think that it's been artificially low for a really long time. And I think we don't talk about this enough, that, when the interest rate is that low, it does have, consequences through the rest of the industry, right? Like a low interest rate is not automatically a good thing. The other part of that is, I think my biggest criticism now that kind of the emergency is passed and we can look at what we actually got for all the COVID relief that we spent. And I think it's really important to remember, we literally fired bazookas of cash at the Fed. There are plenty of people that made lots of money just following the stock market and seeing what the Fed was like basically propping up with all of that money. They made out like bandits there. And now that we're looking at how much of the money, the trillions that we spent on that, actually ended up in the hands of things like rent relief, right? Or, things to actually help people, it's becoming more and more apparent that money was just frankly misallocated, and we did need more oversight there. So, I just think it's important to realize when we have an emergency, it matters how you spend that money. And I think we're looking at it now and realizing it didn't really help people as much as it should have.